Oops, I was wrong. That's right. Stocks don't want to go down, they want to go up. And there might have been a bit of a trap. Let's look in a little bit closer because stocks don't want to go down, they want to go up. This head and shoulders pattern has got nothing because the bull showed up exactly where we expect them to. We're going to grab a horizontal ray, we're going to grab the magnet, and we're going to snap it on yesterday's high of the day, 640.49. What do we note? Well, if yesterday we said that gap downs were for buying, well, that's exactly what happened. You can see here at the open, we went down, we went up, and the gap up was for selling, right back down to support. So what happened? Exactly where we expected to find buyers, we did. And after that happened, it went straight up. So what does that mean? Well, it's pretty simple. Right now, stocks should have gone down, but they did not. We talked about that yesterday. And this basically means that this is a very curious time for the stock market because yesterday we were fully bearish on the 1 day and now we're not because we closed above the candle high. Let's look a little bit closer because you might be a little bit confused. Why were you bearish yesterday and then bullish today? Lower highs are sufficient. What did we do today? Well, in case you missed it, we printed another higher high. It's another candle where we're going up. And remember, when I showed you the weekend video on Sunday, I said that, remember, hollow candles are really important. But if we print lower lows, that is bad because our uptrend is going to be lost. Well, that's exactly what a trap is. It's when we're supposed to go down, but don't. And as long as we're above 610, as we mentioned before, that is the pivot. The pink line corresponds with the pink number. It's 613. We're going to call it 610. So we went from being fully bearish yesterday to being bullish today. Well, not technically fully bullish. What we're going to do is actually go to yellow. So if we go here, what this basically shows us is how we can progress from being fully bearish, print a lower low, close below, print another lower low, close below again. We go from being cautious to cautiously bearish to bearish confirmation, all the way down to number 4. If we want to flip back to being bullish, what do we have to do? Print a higher high, close above the candle high. Lower highs are sufficient. So today we printed a higher high and closed above it. So we're not bearish anymore. So what do you note here? Well, we got green, yellow, green, and if in doubt, zoom out, which is green. If in doubt, zoom out again, green. If in doubt, zoom out again, green. So was that a trap? Do stocks want to go down? We talked about this ad nauseum. Stocks should go down. They're due to go down. They're not going down. So this is where the note we talked about is very relevant. We have to wait until Friday at 4 o'clock because the hollow candles, we said this exactly on the weekend. 9 out of 10 have hollow candles, which basically means that during the candle period, if we're looking here to the 1 week chart, it means that at Friday at 4 o'clock, more people bought stocks and sold them. That's why we get a hollow candle closing higher than we opened. This right here is the 1 week chart. So opens on Monday, closes on Friday. This week is a shortened week, so we open on Tuesday. Needless to say this, though, if during the session we see dip buying and we're in fully bully boomtown buy all dips and we are cautiously bullish or bullish or bullish or bullish, does it really matter what the news is? Not really. Cool. Ceasefire. Well, I didn't hear anything about that. So does it matter? Apparently not. Military parade. Poof. What's going to happen on Friday? Well, we got payroll and we got average hourly earnings. That one's important because I just know what is. Is it going to move the needle, though? It doesn't matter. That's the news. This is the reaction to the news. If stocks go up, does it really matter why? Remember, we make money when we buy a stock for less than what we sell it for. Buy it for 100, sell it for 200, make 100. Wait, buy it for 100, sell it for 200. What's my net profit? $100. Does it matter who the president was? Does it matter who the CEO is? Does it matter the reasons why it went up? Or does it just matter that you could have sold it at 200? I think it just matters that you could have sold it at 200. So all that matters is the reaction to the news, not the news. We look for high volatility events. That is basically what this economic calendar shows us here. Let me make it really simple for you. Right here, it shows you 3 implied volatility. Implied volatility means that these are days that could really make the market move. For this week, there's a couple market moving events. President Trump spoke. We talked about that yesterday. Today, not very much happening. So it's all about the reaction to the news. Tomorrow, ADP non-farm payroll. I am looking forward to the Friday number, though. Unemployment, which is supposed to go up a bit, and then average hourly earnings. So just because there's high volatility events does not mean we have high volatility. Also, just because there's no high volatility events does not mean there's not going to be anything that happens. But sell in May and go away and come back on Labor Day. Oh, wait, Labor Day was on Monday. That's right. So sell in May and go away and come back on Labor Day. Are stocks going up or are they going down? Oh, looks like we're curling a little bit. If you could please do me a huge favor and consider smashing the thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. So what I'm trying to show you here is that there's reasons why stocks should go up or down. Just like on here, there are reasons why stocks should have high volatility or go up a lot or go down a lot. It doesn't mean they have to, though. It just means that those are high volatility events. You have to think about positioning as well. Let me show you something here because it might be a little bit scary for you. I said I was wrong, but was I really wrong? You clicked on today's video. You're watching 6 minutes in. This is what I want to show you now. Do you see the head and shoulders? In October of 2024, down to the bottom in April of 2025, that was a bear market. That was a decline of over 20%. Yesterday, I warned you about 15%. So I said, oops, I was wrong. I wasn't really wrong, though. I told you to wait till Friday. I just wanted to make a video you would click on and watch. So right here, what this shows us is that we had peak in FOMO, which is greed, and now we got a lower high. So high, higher high, lower high. If we keep getting lower highs and lower lows, where are we going to go? Lower. If we go down a little bit, we can go down a lot. It is impossible to go down a lot, until we go down a little bit. Bounce from a lower high, lower low, lower high, lower low, lower high, lower low. Well, there's our low, there's your high, there's your lower low, there's your lower high. Do you see it? Cool. This is what we're going to do. People asked yesterday about how to manage risk or what that means for me. Well, it's the same thing I told you nearly 2 years ago, Pinky. This is a year and a half ago. This goes back to 2023 in December, where I said, happy ho, ho, ho. We're over here in extreme greed. And I said, be careful. Friendly reminder, we're now in extreme greed. And now would be a great time to manage risk or buy insurance. What does that mean? Set a stop, raise a stop, or trim. That's exactly what I did in my account again today, too. If you look here to my personal holdings, which I showed you yesterday, I exited some stocks today. If I exited 4 losers, I sold into the strength, or in this case, weakness. I trimmed 4 names, and I added 2. So what does that mean? It means my account's going mega up. Right now, I'm up 17.7% on the year. In my second account, I showed you yesterday, right now I'm flat, I'm down by 0.1%. So it's actually an up week for me. But I'm up nearly 19. So what am I really doing right now? I'm not doing very much. The reason why is because the ideas that I am being presented are shorting semiconductors for 3 months, shorting the S&P for 3 months, shorting the NASDAQ for 3 months, shorting the Dow Jones for 3 months. Those are your only ideas? Yep. Those are my only ideas. All I can do is say buy or delete. In this case here, I already own SOXX. It's right here. We purchased it back in July, actually. We bought it in July, added on July 31st. We've been holding it for 5 weeks. So we're already roughly halfway through the window of opportunity. That's correct, which means that right now I am choosing cash over going short, which means that I want to let the cycle play out and then basically just buy the stocks that have gone down and are going to stop going down. I have my system that works for me. If you want to find out more about what I presented here, you can't even pay me if you wanted to. There is no membership. What you can do is subscribe to the channel, or you can go and watch the YouTube stream that I published today, which goes through in grave detail near the end. I explained a lot in the last hour. I went through every methodical trade, everything I went through, and that's all available for you if you watch all the way until the end. Let's just wrap it up here because that's pretty much it. Head and shoulders, knees and toes. We talked about being back here into neutral. That means that if we were in greed and we sell extreme greed, we went from extreme greed to neutral. Extreme greed to neutral. So where could we go now? Same thing as stocks. We can go up, down, or sideways. Here's what I want to leave you with. This talks about short-term candles, specifically the most recent 3 candles. Why? That's called a trend. If you're a technical analyst and don't understand trends, you need to be familiar with trends. Because if you look at the scoreboard, is there any argument about who's winning? Well, in this game here on November 23rd of 2024, the Grizzlies won. Over here, the Bulls won. Why? There's more points. It's simple, isn't it? Well, that's exactly what I'm showing you here. Depending on whether we talk about a game, a series, or the year, you're going to get different scores, which is exactly why we have different dots here. So if in doubt, zoom out on a daily video. That's right. I was wrong because I said we go down the day before. I wanted you to be prepared to have some insurance. If in doubt, zoom out though. And as of right now, we don't have very much to worry about. The only thing we have to worry about is if we're not worried. If we haven't already managed the risk, here's what we have to be mindful of. Pay attention to the top here, October. Pay attention to this number right here. It's November. Then we got December. When did the market roll over? In January. So it looked like I was wrong over here for 1 or 2 months, and then I was really right really fast. And the reason why is because the market generally takes a staircase up and the elevator down. It'll grind higher for a really long time, like in here. Look where it ultimately went back down to. So grind, drop. Right within a few weeks here, right back down to where it started. Look how long it took. February, all the way till January, and then January till February, it all fell out. Wow. Staircase up, elevator down. If we think about this, now let's delete everything. Where does this correspond to, this head and shoulders here? October, November, and then December. Okay. In October, what did you have? You had a chance to sell. October is right here. Let's look at it. So we got October right here. Oops, October. October went up. So I told you to manage risk. If you go back and watch the videos, I'm confident that's what I said. Manage risk, manage risk. Then I said double bottom, a lower high. That's the warning right there, November. What happened in November? November to remember? Yes, it was. We were peaking out. If we draw a box right here, arguably, there's a zone. Above is good, below is bad. Over here, I even made a video called Mega Crash. Why? I just know what I'm doing. I've been doing this long enough to know when to be humble and when to be aggressive. Right now, it's time to be humble. Stocks are going up. We've managed the risk, which means we're enjoying the gains. The market's going up. We're making money. But when things get easy or they get hard, what I try to do is to defer to my best practices. This should be the second or third link in the description and should be totally free. How to make a plan. It's never too late to make a plan. You want to sell into strength, not weakness. So, like I mentioned yesterday, if the idea of going down to 610 scares you and you do not take advantage of the rip to sell into today, you deserve to lose money. Huh? If you hear the warning and choose to ignore it, and we do go down to 610s, you knowingly chose to ignore or not heed the warning. That's on you now. You watched all the way till now? Make a plan, please. If you can't, here's what you should do. Expect the best. Be prepared for the worst. Be ready for a surprise. You should aim to be less surprised, not unsurprised. Read the last bullet point if you want to. I mention that very frequently. And then finally, if you don't know what to do, you're like, well, making a plan sounds really easy, but I still don't know what to do. You're probably wondering, should I wait, buy, or sell? Pause if you need to, because you want to avoid what you will regret more. Keyword being more. What does more mean? No one likes losing money. But do you generally feel more FOMO than you do fear? Or more fear than you do FOMO? This is what I did today. I just showed you. I trimmed a whole bunch of stocks. Go back and rewind if you want to. I exited some, I sold some, and I bought some. Why? I'm generally in this camp. I'm now 60% cash in my primary account and 93% cash in my second account. Why? I'm a scaredy pants. I'm usually number one. If you don't know if you're number one or number two, there's a way for you to cop out. Just look at answer number 3. If you can't decide, do 50%. As a rule of thumb, if you're asking if you should sell, you should at least trim. Why? Because you're already telling me you're nervous. Here's the reason why number 3 works well. If pretend you can't decide and we go up, you're going to say, phew, thank God I sold half. My loss is only half as big as it would be. If we go down, you're going to say, sorry, if it goes higher, right? If it goes to number 2, you're going to say, phew, thank God I only sold half, because stocks are going up. There you go. I just told you what you need to make a plan, why you should make a plan, and I gave you months of warning. If you choose to hear the warning and ignore it, that's totally fine. If you want to find out more, again, I told you about that video at the end. Now might be a great time to smash a thumbs up or subscribe, or come hang out with me at 8:30 a.m. tomorrow. Thanks so much.